All right, so I think let's get started. Thank you so much for joining our webinar this afternoon. Obviously, the topic being navigating the UK market in this year, and just a guide to interest rates, currency trends, and mortgage options for our African investors. And we're very fortunate today to have Hiten visiting from Visionary Finance to share his wealth of knowledge on the markets in the UK currently, lending options, loan to values, and interest rates, as well as Tom, who's going to share some information with you a little bit later on what we currently have on our portfolio to offer our investors, and then take you through some cash flows, or how to, the easiest way to purchase and what that looks like. And then also just to answer any kind of questions that you may have. So just to get started, today my name is Shelley, just for those of you that don't know. And just going to give you an overview of IP Global, and then Hiten's going to give us some information. Like I said, Tom's going to take us the current the property portfolio, and then the cash flows. Sorry, I went through that on the first slide. So IP Global was founded 17 years ago by Tim Murphy, and basically it was a simple idea. At the time, he started purchasing property himself, and then friends and family were like, please, can you help us with this process ourselves? Liked what he was doing, and then decided to actually start a business. And now we have a global presence in Hong Kong, in Asia, in Dubai. Tom is situated in Johannesburg. I'm in Cape Town. We have an office in Nairobi, and then also in London, Manchester, and Lisbon as well. We have a fantastic track record with over $3 billion worth of property that we've sold in our portfolio, over 30 markets and over 100 developments. Now, obviously, purchasing property offshore can be overwhelming, and there's a lot of aspects to consider. And because we're dealing with people all over the globe, it's important that we hold your hand throughout this entire process. So what we do as a company is we'll meet with you face to face, understand what your goals and objectives are. We'll then try and put you into, we'll show you what we currently have on our portfolio and what will suit your budget and your requirements. We'll give you information about the property, share information about how you are able to obtain a mortgage. And then what we do as well is we have a company called Complete who will help you manage that property on your behalf. And if you're wanting to sell it in 5 or 10 years time, we can help you with that process as well. So we really here to guide you through the entire journey. So basically, there's a number of things that we need to do in order to add property to our portfolio for our investors to consider. And what you'll find is that when we send you information, this is the kind of information that you'll have a look at, so that you feel confident about the investment that you're purchasing and the property that you're taking a look at. And the kind of indicators that we look at is government regeneration, investment infrastructure, private investment. We take a look at industry and company migration. So you've got a lot of companies decentralizing outside of London. Your law firms, your accounting firms, your financial firms now have a presence in these other areas. So students don't have to finish studying and then flock to London to find a job. They can actually stay in the areas that they've studied. We take a really good look at population growth and then supply and demand imbalances. It's really important that we understand this aspect as well, because we would like to let these apartments out fairly quickly and easily on your behalf. And then we look at transport, what kind of transport facilities are in the place, in the areas, and then education facilities as well is really something we take a look at. So these are the kind of boxes that we need to tick in order to add property to our portfolio for you to consider. Obviously, why invest in property? I mean, it's a medium to long-term wealth generation. There's 2 ways to generate wealth through purchasing property, and you're looking at the yield and the capital growth. One of the biggest things and why we have Hiten on the call with us today is the ability to leverage via mortgage finance. It's really important to understand that process. Many people don't think it's an option. And I think it's really important for you to understand that it is an option. And obviously, it's the only kind of investment where you only have to put a deposit down and you can earn a return on investment on the total value of the equity, and not just the total value of the assets, not just the equity that you put in. And that gives you the best return on investment for the property purchase. It's a staple part of a balanced portfolio. It's obviously seen as a low risk. and it's a great hedge against inflation as well. So today I'm going to introduce Hiten through to you. He's going to take us through a few slides on mortgage options in the UK and how it works. Hiten is having developed effective strategies to execute long-term objectives. His financial services business works over 60 different lenders, servicing clients worldwide and facilitating over £500 million worth of lending since 2015. So over to you, Hiten.
Thank you, Shelley, for the kind introduction. Hi, everyone that's joined the call. My presentation should last between sort of 10 to 12 minutes, and I'll give you the opportunity to ask any questions at the end of the presentation. So if you've got any questions, just please do keep note of them, and I'll certainly be happy to answer them towards the end. So as I said, just a little bit about visionary finance. Shelley's just kindly run through very high level, but learn more about what we do. So we're regulated by the Financial Conduct Authority here in the UK, and we work with foreign investors to support them in securing finance for their UK property purchases. So no matter what city or location you're buying within the UK, we can help you fund the purchase of that property. And it doesn't really matter where you are located in the world. We've got lenders, and we work with lenders that can help you secure mortgage finance here in the UK for the UK purchase. As a firm, we work with over 70 different mortgage lenders. So that's mortgage lenders that are based predominantly in the UK and that can help UK clients, as well as clients that help international investors to secure funding on their UK purchases. Since last year, we arranged £235 million worth of lending in 2022, so which is a very vast sum of money that we are facilitating when we're arranging lending. And of course, our relationship with a number of the lenders that we do have is quite strong because of the volume of business that we do place. So again, it just gives us access to those sorts of exclusive arrangements with various different lenders who you may not have heard of. And for international clients, we work with over 15 lenders who specialize in lending to international and foreign nationals. So again, our vast experience in this particular area means we've got a good spread of lenders that can help you secure your lending no matter what your circumstances. And then finally, our vastly experienced team will make sure we find you the best mortgage solution. Ultimately, we are engaged with you as our client to help you find the best deal. So whilst we work with the lenders, you are, as our clients, are the priority of making sure that we secure you with the best lending options that's available in the marketplace. And if it's available, we will get it for you. Can I have the next slide, please, Shelley? So meet our mortgage advisors. So we've got a total of 2, 4, 6, 7 advisors, and including myself, I tend to give a little bit of advice as well. So I like to keep my finger on the pulse, and they're supported by the administration team, who you can see there. We've got a couple of new starters that have joined as well, and our team's sort of growing, and we are actively recruiting to keep up with the demand of business that we're seeing coming through our way. So these are our wonderful advisors and administrators. So I'm going to now run through the UK mortgage process, because a lot of most of the time it could be quite daunting if you've never done this before. And what I would like to reassure all of our sort of listeners is that we will effectively handhold the entire process on your behalf. So the first part of the process is effectively the client introduction. Shelley, Tom will make the introduction to yourselves into our inbox, and once that introduction is made, we will then reach out to you and arrange an initial phone call to go through your personal circumstances, your requirements, and what you're looking to achieve in terms of the financing options. And that call typically lasts about sort of 15 minutes, and we can set that up via Teams, Zoom, WhatsApp. So whatever mode of communication you want, we can certainly look to facilitate that. During the call, we hope, because of our knowledge and because we're doing this day in, day out, is to be able to give you an indicative advice on what you're likely to be able to achieve based on your circumstances. And that could mean, give you an indication of the maximum borrowing. So it could be, us saying to you, look, based on your circumstances, you can borrow up to 70% loan to value, etc. And rates typically you're looking at is, between a certain percentage. So again, we're giving you that indication. So you're walking away from that call knowing roughly where the land lies with your financing options. Once we've done that, then it's the onboarding process, which effectively requires us to capture your documentation, evidence of your income, your personal fact finds, and we will drop you an email with all the documentation that we'll need from you to evidence your information. Once we get that back from yourself, we've essentially got the next stage, which we research the market. So that process effectively involves us looking at your granular information, specific information, and then looking to see what's available in the marketplace at that particular time of application, and to secure you with the best lender that's available, making sure that all of your parameters, because as an individual, your circumstances are going to be fixed, and what we need to do is find a solution to your circumstances to make sure it fits your individual requirements. Once you've agreed on that product that we've selected for you, and we will send you, a couple of options of products with different options, you'll give us the green light, and we will then start the application process on your behalf. That typically the application submission process takes a couple of days for us to formulate the application. Again, we will do that. Your communication will be with us as your mortgage advisors. We will then navigate the lender underwriting. So at this stage, the application's with the lender's going through its due diligence process to make sure that it's comfortable with you as the client, and we will answer any questions that come off the back of that. Equally, there might be supplementary information that they may request, which we may have not have captured, in which case we'll get clarity from you and just navigate this whole process on your behalf. And then the final process, once we've navigated that, is your mortgage offer gets issued. So from start to finish, we will help you to sort of overcome the challenges of getting the mortgage offer issued so that you can then fund your purchase through leverage. Next slide, please, Sherry. So just walking through that whole mortgage journey. So day one, we have the initial consultation and an introductory call with one of our mortgage advisors. Okay. 1 week later, you will have submitted all your required documents, so we can effectively begin researching the accurate lender options. The third stage will be 10 days on. So 3 days after your documents have been submitted, we'll have finalized and agreed the lender to apply to. And again, this is a consultative approach that we do take. So you are giving us any sort of, at this stage, you're able to ask any questions, any concerns you have with the product, any information you need. It's very consultative, so you're fully aware of what you're applying for. 6 to 8 weeks will be the process taken to effectively carry out the underwriting stage. And again, at this stage, you'll have a dedicated administrator, the administration team that I introduced you to in the earlier slide, and they'll keep you updated on the progress with the mortgage application. So you're fully informed as to what stage your mortgage is at. 9 weeks into the process, the valuation process takes place. So this is where the lender instructs the valuers to go out and value the property, because at this stage, typically the lender is happy with your circumstances, your profile, and they are prepared to lend to you as an individual. This stage now, effectively, the lender wants to get comfort that the property that they're lending on is suitable security for lending purposes. And then 10 to 12 weeks on, after your initial consultation, you will receive the mortgage offer. So that's typically the timescale that we're looking at. We're looking at from day one, right? It will take probably about 10 to 12 weeks to get your mortgage offer through. So we just need to be mindful that we are prepping and planning our application process in advance of when the completion is going to take place. Once that mortgage offer's been issued, the next process will be that an offer will be sent to yourself, and it will be sent to your solicitor so that legal process can be finalized. This can take between 4 to 6 weeks, because the lenders, the solicitors that you will have been working on your behalf will also be working on behalf of the lenders to satisfy their legal process. And then typically after about 18 weeks after your initial consultation, your mortgage application journey ends, and you will now have the keys to your new investment property. Now, 18 weeks is sort of the worst case scenario. We have got it through as quickly as 6 to 8 weeks, but again, it just depends on which lenders we go to and what their turnaround times are at the time of application. But this gives you a rough idea that if you're looking to purchase somewhere, give yourself at least 3 months so you've got sufficient time to effectively get the mortgage through in time for completion. Next slide, please. So what's the current UK mortgage market looking like? Well, the Bank of England base rate currently sits at 4.25%. If we cast our minds back to July last year, the base rate was sitting at 0.5%. So we have seen a gradual increase in the base rates over the last sort of 6 to 9 months, and that's because of global pressures when it comes to inflation. Obviously, inflation, I think, worldwide is impacting on central banks putting up the base rates, and with the Bank of England currently sitting at 4.25%. Do we see that increasing any further? Probably not. We're expecting that to have topped out to where it is at the moment. We may see another 0.5% rise to maybe 4.5 to 4.75%, but it's looking unlikely because inflation appears to be going in the right direction. As a result of the base rates increasing, mortgage rates have also increased in the UK, but so has the demand for rental properties. And I'll touch on this particular point further on in the slide, as I'm sure Tom will speak to you about the market as well. The other incentive is that the drop, as international investors, the drop in the value of the pound has seen international investors purchase more for their money than in previous months. Obviously, the pound's dropped against the stock currencies, etc. Resulting in property prices, in some instances being as cheap as between 5 to 10% lower than where they were sort of 9 months ago. So the reality of it is, as an international investor, you've got the benefit of the exchange rate weakening of the UK of the pound sterling. And then, despite what sounds like an initially negative outlook with base rates going up, etc., and the mortgage costs going up, the UK market remains stable and reliable for international investors. Yes, we've seen a little bit of a slowdown in activity in the housing market because I think there's been a lot of turmoil in the recent months, but as the market adjusts itself to the new norm, we are seeing people now coming back to the market thinking actually this is the best way to sort of secure our money. And especially if you look at the point that Shelley made, that property is inflation proof, it's actually becoming an attractive proposition once again, as the dust starts to settle down with all the turmoil around inflation and interest rates going up. Next slide, please. So now what I'm going to do is just cover off a few frequently asked questions that we get from our clients, just to give you some context about some of the key questions that are being asked. So one of the key questions that we get asked quite often is, what are the mortgage rates like in the UK right now? Well, the simple answer to that question is that for international clients, they're starting at 4.99%. Which, to give you context, if you're looking at the Bank of England base rate sitting at 4.25%, that's what the central bank rate is. Lenders are effectively having a margin of 75 basis points and starting lending at 4.99%. So there isn't much margin being made there. And of course, as you can see, if we compare that rate to, say, UK buy-to-let investors, who we deal quite a lot with, UK buy-to-let rates are typically starting at around 5% as well. So you being an international investor, you're not actually being disadvantaged by going for a UK mortgage, because the rates for yourselves as international investors as well as UK investors is broadly aligned. So there isn't any sort of disparity on that. So it's certainly, you're on parity with UK investors. So certainly not disadvantaged there. The next question we get: is now a good time to invest in UK property? Again, we get asked this question quite often, and if I just want to point you to a very interesting sort of statement that I read from one of our respectable newspapers, the Guardian, towards the back end of last year. And what it said: in 2022, the number of rental properties dropped by 9%. That's according to data in the Guardian, which again is a very, very respectable paper here in the UK. But the tenant demand grew in United Kingdom by 23%, again according to the same newspaper, The Guardian. Now, that kind of if rents are going up and the tenant demands are going up, why are people selling their properties? Well, essentially the principal driver behind that has been sort of tax changes, but of course a lot of landlords here in the UK are effectively small landlords, 1 and 2 property landlords, and of course the tax burden that they're being faced because of domestic tax legislation is negatively hindering their profits and the returns that they're making. Equally, the regulations, a lot of landlords own second-hand properties, so the regulations around second-hand properties is also quite tightened, whereas the types of properties that you would be looking at, that you'd be sort of looking to invest in and be sort of offered, are from new build developers, etc., where you're effectively being given a turnkey solution. So the level of management that you're required to do as international investors for the types of properties that you're being sort of offered is actually a lot less, and you're very much hands-off because it's a very passive investment for yourselves. And so what landlords who are in the sort of the second-hand property space are saying, well, actually, we've had enough of this. We want to effectively get out, and that's why the rental properties have dropped, but equally tenants, because mortgage interest rates have gone up now, they're not just gone up for buy-to-let investors, they've gone up for domestic owner-occupiers as well, people that want to buy properties to live in. So they can't afford to borrow as much as they were once able to borrow. And as a result of that, people are saying, well, actually, I don't want to be buying just yet because mortgage rates are too high. Let me rent. And therefore, we're seeing a massive demand of rental property, tenant demand, which has increased by 23% in sort of 2022. So a really good time to sort of look to invest in your passive turnkey investments. And of course, the weaker pound is making investments for international buyers a lot more attractive. So again, you've got that benefit of being an international buyer there. So moving on to the onboarding process, which I touched on in the process slides earlier on, what documents do I need to provide? Well, in order to get yourself mortgage ready, there are effectively two processes. You've effectively got our Visionary Finances onboarding documents, okay, which consists of a fact find. Now, whilst we will carry out a very high level fact find during our initial phone call, we send a bit more of a detailed documentation which captures things like your address history, your employer details, etc., which is a lot more detailed for us to then use that information to submit the application. We send you our terms of business, which basically highlights our scope of service to you, and we send you our privacy notice, which basically confirms that any information that you give us will not be shared with any third-party providers. Okay, so that's our Visionary Finance onboarding documentation. Now, the documents that you will need to provide to us in order to verify your income and your personal information are as follows. So you've got essentially the identification. So we need to be able to verify you. So that would be passport, driving license, identification cards, etc., that we will need to see copies of. We'll need bank statements evidencing your salary going in, evidencing your account conduct. So again, that typically is the last 3 months, but sometimes some lenders may request the last 6 months worth of bank statements. The next requirement will essentially be the proof of deposit. So again, what lenders want to see is how are you going to be able to fund the deposit? Where, the lender will lend you, say, 70% of the value of the property, but how are you going to make up the 30%? And therefore, we'll need to see evidence of that deposit. And also we'll need income verification. So depending on, what jurisdiction you're based in, which country you're based in, how their income verification works, we may need to see your tax assessments. We may need to see pay slips if you're working for international organizations. So again, all this will be sort of clarified to you in an onboarding email that we send over to you, but that's broadly what you would need to be able to sort of provide to us in order to become mortgage ready. Popular question that we get asked very, very often is, what is the maximum I can borrow? And the simple answer to that is you can borrow up to 75% loan to value. Now, the way we categorize lenders, you've got the primary A1 lenders, essentially, that effectively are risk-averse lenders that will look at you and make sure that your profile as a client is actually very strong. And if it's strong, they are prepared to go up to 75% of the value of the property. Okay, so what we would do is, if that's your priority and if your circumstances fit, that would be our option to make that recommendation to you. But for example, if you've got some quirky circumstances, in which case you've only recently set up a business, you've not got the level of income that's needed to meet the minimum income requirements, etc., we may be restricted to something like 55 or 60%. But again, this will all be uncovered when we do have the initial onboarding conversation to give you, some level of idea or expectation of what you can look to achieve by way of interest rates. And of course, our objective, because of the variety of lenders that we work with, we'll try and get you the best lender option that essentially is out there for your individual circumstances. Last slide now, I think it is what costs are involved. So obviously, costs involved with mortgage, applying for a mortgage, which is pretty standard here in the UK. And these costs apply to UK clients as well. So you're not disadvantaged by being an international investor at all. The first cost essentially will be the application fee. So a lender, when we make an application, typically charge between sort of, a couple of £100 to maybe £500 to receive your application and to review it. Okay, that's their sort of the cost of that the lender charges. Then there's a valuation fee that's payable. So that valuation process takes towards the end of the underwriting process, and the valuation fee is taken in advance. But of course, if it doesn't take place, then that gets refunded. But that typically, the typical fee is paid to the valuer that goes out and values the property for the work that they're conducting. The next fee is the product fee, and that product fee only comes payable once your mortgage product complete. So once your mortgage offer is completed, the product fee can typically be added to the loan. So in essence, you're not paying that as a notional cost up front, it is added to the loan. So for example, if the product fee is say £1,999, that will be added when your mortgage completes. So when you come to redeem it, and if you've borrowed £100,000 at the outset, the amount that you need to pay back in 2 or 5 years' time will be £1,199 essentially. Okay, and then the final cost is our broker fee, which we charge, and we don't charge anything up front for the initial consultation. We don't charge anything for the research or the onboarding process. We will only charge our fee once we have finalized a product, once you've given us the green light to start the application process, and once we've formalized the application process. By that time, we've probably conducted between 5 to 7 hours worth of work on your behalf, and we're pretty confident that the lender that we will apply to will essentially be a lender that essentially be able to make your mortgage offer, and at that stage our broker fee comes payable. Now if at any stage that the lender decides to not proceed with the offer with yourself, we will rebroker that case with the next best available lender free of charge for you. So again, you only pay that fee once to us on an application basis. Okay, and then lastly, the last slide is the Q&A session. So Shelley, I'll probably hand it back to you now, because I'm sure there'll be questions at the end which you may want to sort of field.
Fantastic, Hiten. Thank you so much. That's it's really informative. And I think for most of our South African investors or African investors, they don't even know that this is a possibility. So I think, just the whole education process is, like, let's find out if you qualify and how it will work. And in previous meetings that I've had with you, it's just been absolutely phenomenal as far as we've basically sent a fact find with a meeting request to yourselves. You come back with a time that's available, that's also suitable for the clients. And then what we do is we set up a time for them for you guys to have a quick discussion. And very quickly, you can then identify whether that person will qualify for a mortgage or not. And so we're very transparent with that process, because nobody wants to go down this line of work and put that much effort in if we don't believe you will qualify for a mortgage. So thank you for that information. It's really, really helpful. I'm going to send it over to Tom now. I think what we're wanting to do is just take you through just a few slides of some of the developments that we currently have on our portfolio, just so that you can see what it looks like. Obviously, we're not going to take you through it in too much detail, because what we're wanting to do is book those one-on-one meetings with you. So it's just a brief overview of the developments and the areas that they are situated in. And then we're really happy to discuss that with you further in a one-on-one consultation. So over to you, Tom.
Thanks, Shelley. Good afternoon, everyone. Hiten, thank you very much for your presentation. Such an important part of property acquisition within anyone's investment portfolio. And just to touch on that, here in South Africa, we do less than 10% of IP Global's total business globally. And the one thing we have as an advantage over a lot of our colleagues is the fact that they're dealing with clients that are investing that are either UK based or maybe based in the middle or the Far East, where our other offices are. And they don't have to deal with what we have, and that is one of the most volatile currencies in the world. So a real huge ability to be able to not only take advantage of leveraging and the impact that has on returns on internal rate of return or return on equity, however you want to look at it, but also the impact that it has with regards to having a non-rand denominated asset and the benefits that plays into one's overall investment portfolio. So just to go through, and it very much a macro overview, IP Global as a company look to offer different types of property in different locations, both cities and countries. And majority of our opportunities will either be totally off plan or will be a total refurb of an existing building. And by doing this, as Shelley said, what we're really looking to do is just make sure people are aware of the fact that you can leverage, but also let you know that there are various opportunities that are available, and we're not going to be looking at one in particular, but rather your personal circumstances, requirements, cash flows, and then recommend the most appropriate opportunity. all of the various opportunities we have, they all have one thing in common, and that is a very strong investment case, which is very much detailed in our brochures. All our brochures follow the same format, going through all the details you can expect to see, but fundamentally always arriving at the same fundamental factor, which is a supply and demand imbalance, both on a buying and a rental point of view. So without further ado, first one, we just quick overview of Langford Tower. This is based in Sheffield. Sheffield forms part of that northern powerhouse that sometimes people refer to. Essentially, that's all the investment that's gone up north, having historically had a massive divide from the north-south divide, as they call it, with London really being the key and the focal point and the greatest contributor to the GDP within the UK. That has changed drastically over the last almost now decade, I'd say. Time has flown. And Sheffield is a fantastic city. A lot of people probably know it for its steel, or maybe even for one of the football sides that they have. But here we have Langford Town, and this is a refurb of an existing prime located, centrally located building. And to be quite honest, at the price per square foot, if this were a new build, you wouldn't be able to get these prices. So fantastic price point starting at £142,500. Fantastic rental yields, which will make it cash positive from day one. It's a combination of studio 1 and 2 bedroom apartments, 24 floors in a fantastic building. And like I say, this is actually owned by the developer, who have done a total refurb and refit. So fantastic opportunity. This initially 20% in, and then completion. And I've actually got an example towards the end of this presentation to show you, but completion in January next year.
Yeah, Tom, I think it's a great option, just because obviously it only completes in January next year. So that allows our investors to put a deposit down now of 20%, which would be, about 30 or 40,000 pounds. And then the rest once it's complete. And I'm sure you'll take them through it in a bit of time.
Yeah, absolutely. So the next one, the Bailey. Manchester, a very popular investment location, certainly the biggest and the largest GDP of any of the northern cities that we deal in. Fantastic opportunity here again, good price points, a fantastic location. We've got some fantastic aerial views of the development, which is being built. Again, for those that are very stuck on getting something in Manchester, because it seems to be a very popular location for people to invest, fantastic opportunity again, one that completes towards the end of this year. The Silversmiths, we've only got 2 or 3 apartments left. All 3 of them are 2-bedroom apartments. This is an incredibly, for me, it's personally my favorite, and I've been with IP Global now for 6 years, probably my favorite development. It is a total refurb of a grade 2 listed building with a developer that all of us and even our CEO and founder of IP Global, Tim Murphy, has purchased a property in this development. Loves the developer, the painstaking time and effort that goes into ensuring that he does everything according to the planning permission, and especially with a listed building where the amount of scrutiny is that much greater than on a new build, is huge. And we've done a previous development with him where we can show you exactly how well the finish came out and to what a high spec it was done, and the fact that it was rented out almost immediately, even though it completed during COVID. Which is a testament to the quality of the product and also the quality of the location. This is in the Jewellery Quarter, which is pretty much central Birmingham. And Birmingham is certainly the second largest city in the UK, very centrally located, the Midlands as it's called, and a fantastic opportunity, which, if someone is looking for Birmingham, I would look no further than this opportunity. The Carrick and Edinburgh. I mean, we all know Edinburgh, and if I may, a personal, when I first went to the UK in '92, and I was there for 21 years, I think it was about 94 or maybe 95, I went for New Year, Hogmanay, as they call it in Scotland. And I actually caught a Greyhound bus, and it was nighttime, and we came around the corner and I saw the lights on the castle, Edinburgh Castle. Just an unbelievable city, you know, fantastic place for those golfers amongst us. Obviously very close to St Andrews, the home of golf. But a thriving city doing so incredibly well at the moment. And we've seen this in the past when we've been in Edinburgh and more recently actually in Glasgow. So there's a lot to be said about investing further north than just the northern powerhouse, going all the way into Scotland. And this is a striking building, great location, great price point, which is incredibly difficult to find in a place like Edinburgh. So for those that are looking for something that's slightly different or looking for something to add to an existing portfolio that's very much England orientated, then again, look no further than the Carrick.
Yeah, it's actually the first time we've had a development in Edinburgh over the last 10 years. So we're really excited to have launched this. I think it was just a week ago, and it's selling really, really, really well. All right, Tom, so I think over just to explaining also what I wanted to mention about the Baileys is that I know we had sold out on the units in Manchester, and we've literally just been able to get a few more over from the developer that he was holding. So if people are interested in Manchester and in the Bailey, we are happy to show you what we currently have available there as well. Tom, if you don't mind just taking us through just, you know, what the cash flows predominantly look like. I mean, what we do is we generally, when we send an email through to clients, we're very transparent about all the costs involved. It's really important for you to understand how it works, you know, what the purchase price of the property is, and then what, you know, your return on investment will be, and all the fees involved in between, so that you have a full understanding of it.
Perfect. If you wouldn't mind going to the next slide quickly, Shelley, because that will be on Langford Tower. So Langford Tower, just as a reminder, the opportunity that's available in Sheffield. So an example here, just to take you through it, a purchase price of 147,500. That mortgage is at 65%, so you will actually be able to get more potentially. Obviously, it's all dependent on your circumstances, but me being slightly more risk adverse, I've used 65% just as for this example. But on the mortgage payment would work out, and I've used a rate of 4.75%. So slightly below maybe what Heighton is indicated, but again, there or thereabouts, you'd be looking £380 per month. And then the net rental income, so net gross, and then would be a certain amount. The net amount would be less whatever costs are involved, which would include fully managed agents fees and other associated costs. Works out to be 524. So cash positive from day one, which I think for a lot of investors is an important factor. And then going through the actual payment schedule. So for those that are looking to maybe don't have all the funds available, but definitely will have funds available, or maybe depending on the calendar year, will have restrictions with the amount of money they'll be able to send offshore. I've just put a schedule together that shows you how this would work out. So an immediate reservation fee. A week after that, there would be lawyers' fees. Sorry, there's a typo there. It wouldn't be VPMK, but it would be another lawyer, Rizium Sharples. And then 5 weeks after that, it would be your 20% equity on exchange of contracts. And then after exchange of contracts, you'd have the various, you'd actually get a refund of fees, which would be the reservation fee refunded and £1,000 contribution towards legal fees. And then you'll have the various mortgage sort of bond costs that Heighton went through on his slides. Again, these are just estimates, but fairly accurate. And then the remainder of the equity plus stamp duty, agents fees and furniture pack, should you go that route, would be due in January 2024. So you'd have a total equity and cost investment of just over £70,000, which at today's interest rate worked out to be about 1.6 million rand, and then a projected return on a 10-year hold of 62,500, so about 1.4 million. Now that is a conservative return, so that's in addition to the amount you put down. So should you sell it, you'd be looking at about 3 million rand back from your initial investment. Obviously, I would expect that most people would be keeping their money offshore, but I just wanted to give you an indication when looking at it in a rand stroke pound terminology. So again, it's really just to show what you'd put in. The fact it would be cash neutral, but in this case, it would actually be fairly cash positive from day one, and how the payments are spread across the board. Shelley, if you go back a slide, we've also got opportunities, and we haven't highlighted them right now, just purely because we wanted to give you an overview and be more macro about this. And really what we wanted to focus on was the benefit. Well, number one, the ability of being able to leverage, and number two, the benefit of leveraging. But we also have opportunities in Germany, mainly in Berlin and Leipzig. Those are the two cities that form on the east side of Germany and have a very unique investment case. But again, taking the same situation where, an example, we've got a purchase price of 157,500 euros. We're able to get 62% loan to value. That's already pre-agreed. So one benefit of those who may be more risk adverse and concerned about being able to get funding straight away, this is already pre-agreed, and we can get it issued before you actually go to notarization. And also the rate itself is upfront. So currently the 10-year fixed rate is 3.91%. They only offer principal and interest, so no interest only. But as you can see, it's pretty much almost cash neutral. Yes, you're going to have to put in €9 per month, but that is on principal and interest. And again, a situation with this example, this is the Bowen, which is a conversion of an existing building. So it's actually completing this year. So very much suitable for those investors out there that have got money offshore already, really want to utilize it sooner rather than later. And, you know, that's why we have so many different opportunities, because some people want to utilize money straight away. Some want to utilize it over a period of time. And, you know, we have opportunities that will be 2 years off plan. So in this case, it's going to complete this year. There would be a €3,000 reservation fee. Then, correct, no typo this time by me. Apologies for the last one. VPMK are the lawyers, they're the conveyancers, is the terminology used. Half of their fee would be payable. And then as an estimate for someone going ahead almost immediately, there would be the equivalent of transfer duties, and that's notarization. And notarization is the same as exchange of contracts, other than the fact you actually become the legal owner of the property, which again, for those that are risk adverse, gives them that greater peace of mind. 3 months after notarization, you'd put in 30% equity payment, and then a further 28%, of which only that 28%, 8% of purchase price would be due by you, because the other remaining 20% will come from the lender. So that works out to be 12,600. And then on completion, which is due to be September, October this year, again, the final fee which would be due, which is agents' fees, furniture pack, and some interest you would have paid on drawdown. Again, just to summarize it, what it works out to be, in this case, you're putting in about 90,000 euros, about 1.8 million rand, and the projected return on a 10-year hold for something that's pretty much cash neutral from day one would be just over 100,000, so just over 2 million. So putting that together, you're looking at about 3.9 million rand. Again, like I say, I'm just using rand terminology to for those that would want to work it out on that basis. But again, a fantastic opportunity, and we have various opportunities, various price points throughout. That are very suitable to the particular investment that you're looking at in that particular city, where we're looking for the biggest demographic from a purchase price and a rental price in order to take advantage of that supply and demand imbalance, also take advantage of the low vacancy rates, and give investors that much greater peace of mind. Shelley, over to you.
Fantastic. Thank you so much, Tom, for taking us through everything and all the developments that we currently have on our portfolio. And yeah, I think if anyone has any questions, I think now's the time to ask some of the questions that you may have. I think one of the most important things here is to understand that when you do purchase property in the UK, you are able to purchase where you only have to pay the interest portion of the mortgage back, and you don't have to pay the capital at the same time, and that allows you to come out of it cash flow positive. Is that correct in saying that, Hitton? I think you're on mute. Sorry.
There we go. Can you hear me?
Yes, we can hear you.
Yeah,
Thanks.
brilliant. Yeah, so no, that's absolutely correct. Most of the buy-to-let lenders here offer mortgages on an interest-only basis. They can, of course, if you've got the preference of going for repayment, there are the repayment options, but most buy-to-let landlords do take out an interest-only mortgage so they can maximise the cash flow that they're getting and the return on the investment they're achieving.
Fantastic. Any other questions? Yeah, sorry, go ahead, Tom.
Yeah, I was trying to look. We don't have any at the moment, but it's worth noting, and Hitton will obviously back me up on this, I hope. You know, having been based in London in my previous life, you know, interest rates where they are now, and Hitton did touch on this, you know, they're not overly high. We are, as international investors, able to get what local investors are getting, and historically, if you look at interest rates, they've been incredibly low for over a decade, and this increase is only seeing interest rates basically rise to the levels they were during the 90s and most of the noughties. So, you know, property buy to let hasn't suddenly become one of these, you know, go-to opportunities just since interest rates went down to you know, historically low levels. I was dealing with a lot of international investors doing a very similar job to Hitton when I was based in London, with interest rates where they are now, and you know, the numbers, as you've seen, they work. It's a fantastic opportunity to diversify. It's a solid medium to long-term equity class, and you know, really just wanted to get that point across, because I think there are, dare I say, some millennials who I think the world's come to an end with these interest rates going up, and that's certainly not the case. And you know, it's really about all investments. Doesn't matter what asset class you're looking at. It really comes down to the numbers, and the numbers add up. And especially for South Africans, it's not just about the numbers, but it's about having a non-rand denominated asset. It's making sure that those funds that you've successfully got offshore, or those that you're looking to put offshore, are used in the best way possible. And direct property investment with the ability to leverage is a fantastic way of doing it. But it should form part of a diverse, balanced portfolio for yourselves. So just sorry, Shelley, just wanted to add that in whilst I could. No dig against the millennials, by the way. We're looking for the future.
Fantastic. Hitton, is there anything more from your side? I think at this point in time, I feel like we've done a very good presentation and answered all the kind of questions that people might have asked or wanted to ask. But we're really happy to jump on one-on-one sessions with you individually to answer any further questions that you may have, and look forward, to the next one. Thank you so much, Hitton and Tom, for your time, and hope you all have a fantastic afternoon.
That's great. Thanks, Shelley. Thanks, everyone. Thank you.
Brilliant. Thank you very much. Thanks, Shelley.
Thanks.